You sold your property and now the government wants to take a big cut of your profit. But here's a legal way to keep that money and most people don't know about it. Hello and welcome. Today let's talk about PFC capital gain bonds issued by Power Finance Corporation Limited, a Navratna company under Government of India dedicated to financing India's power sector. PFC bonds are popular choice for investors looking to save tax under Section 85. If you have sold a long-term asset this financial year, this video could save your lakhs. Here's a new investor needs to know. Power Finance Corporation is a leading NBFC in India's power sector. It has consistently maintained the highest credit rating, that is AAA, from all major credit rating agencies. PFC bonds are backed by full strength of this government enterprise. The interest is 5.25% per annum, paid every year on 31st of July. There is no TDS deduction for domestic investors, though the interest is taxable as per your income tax slab. Tip: don't let your annual interest sit idle. Put it to work via mutual fund, SIP, and let it compound through a 5 years lock-in. Invest within 6 months of selling or before your ITR filing date, whichever is earlier. Running out of time? Park the amount in capital gains account at any public sector bank to hold your exemption. The lock-in is 5 years. Minimum investment is 20,000, that is 2 bonds of 10,000 each. The maximum investment you can make in a financial year is 50 lakhs as per Section 85 limit. These bonds are not transferable and non-negotiable, meaning you cannot sell them or pledge them against a loan during the lock-in period. No TDS for domestic investors, though the interest is taxable. For non-resident individuals, TDS will be deducted on interest payments. On maturity, the bonds will be automatically redeemed by PFC and proceeds will be credited directly to your registered bank account. No surrender of the bond certificate required. The subscription mode is 100% on application. No demat account is required. If you don't have a demat account, you will receive a physical bond certificate. And yes, your existing bank check from any bank works perfectly with the application. Now let us look at some frequently asked questions. Question number 1. When will my bonds be allotted? Answer: if the payment is received between 1st to 15th of the month, bonds will be allotted by the last of the same month. If the payment is received between 16th to last of the month, the bonds will be allotted by 15th of the following month. Question 2. I have submitted my application. Can I claim tax benefit right away? Answer: yes. Once you submit your application at the designated bank or collection center, you will receive an acknowledgement slip. This slip is sufficient to suffice your tax exemption. You do not have to wait for the actual bond certificate to claim your tax exemption. Question 3. When will I receive my bonds after allotment? Answer: if applied in demat mode, bonds will be credited to your demat account within 10 to 15 days. If in physical mode, the bond certificate will be dispatched to your registered address within 15 to 45 days from the date of allotment. So, PFC capital gain bonds is a solid option for saving capital gain tax this year. Here's the summary. 5.25% per annum, AAA rated by CRISIL, CARE and ICRA, no TDS for domestic investors, government backed and auto redemption at maturity. Need help with the application? Reach out to Sanriya Finvest in Pune. Links in the description. Thank you for watching. Like and subscribe for more. Don't forget to hit the bell icon.